Welcome back to the table for the Friday, February 14, 2025 installment of Market Plus. Chris Robinson back with us here after the TV show. And we talked about weather a little bit here when it comes to weather, Chris. But let's start with Jeff in Kansas because it's a wheat question, and winter wheat specifically. Will U.S. wheat ever play a major role in world exports?
Well, as soon as you say never, so I'll just say no right now, and you can thank me when they come for our wheat. Bottom line is a lot of that business goes to, it gets done out of the Black Sea with what's going on now in Ukraine. If they come to an agreement, more or less, we'll see what happens. Australia and Argentina both have been picking up a lot of that slack. I would have to say it's probably going to have to be something either political or something, some sort of weather issue where they would come for our wheat. The good news is we've got plenty of it. So when they come get it, and I wanted to mention winter wheat right now. With this little spike we've had heading into this week, new crop was all, I think KC was 35 or 40 cents over the insurance price. Chicago, again, might have even been more than that. But it's a good rally. It's something you want to take advantage of. And we've seen in wheat for the past 2 years where we get these rallies, people get bulled up, and then they can disappear very quickly.
It's not in the question, that's about U.S., but when you talk about world of wheat, we haven't mentioned Ukraine or Russia. There's the discussion of this war may end. We're coming up on 3 years of when this thing started. What does that do to the overall wheat picture?
I don't know. It's interesting. I think a lot of us, myself included, when this first started going, we thought, oh my goodness, wheat's going to go, and what happened? We had a 2-year slide in wheat. Every time you thought the lows were in, every weekend you went home, something bad is going to happen. So fundamentally, wheat is very well supplied. And wheat somewhere in the world every month is being harvested. It's not like corn and beans. It's a little bit different. So I think that it's if we get a drought situation, that obviously turns it around. But we'll have to see. But I think it's the number one problem with wheat is it's well supplied. And every time you turn around, also, too, and this is going to be interesting to see, I'm going to leave with this, we're going to find out exactly how much wheat is still over in Russia that was being held on to during the war, because if the war is suddenly over, you could get a big surprise in supply. That would be my fear if I was hoping that that's going to make things better. You may see supply come on board. We're like, nobody knew we had that.
You don't see it going the other way, that maybe they've overinflated the number?
Well, we'll see. We'll see.
Because it is, and the reason I say that, Ukraine usually was better at reporting, and we had a better, but we never really truly, it's like China with Russia. We don't know exactly.
We don't know. It's like, and lots of times they'll make an announcement, we get a little blip, and then it's, it magically goes away. So that's a very hard market to trade. That's a market that's based on information. But at the end of the day, Mr. Market wins, right? So when you get these rallies, reward them.
I told you too much already. Just hold on. You can't use that phrase yet. We also can't talk about drought. In a minute, let's go Louise in Kansas. Let's stick political, shall we, Chris? Are farmers going to have a hard next couple of years because of tariffs? Or at least the tariff talk?
It's a double-edged sword. Yes, there is. And a lot of this we've seen where it seems to have been a negotiating tactic as opposed to an actual tactic. We'll see what happens. Already they've kicked some of these tariffs to April, and now they're going to take a second look at them. I would say this, tariffs are like every other unknown risk. You don't know what it is, so you've got to defend against what can hurt you. I've got end users that, buy a lot of, like if they're a bakery or somebody, they're worried about prices going higher if the tariff situation goes away. So whatever your risk is, you need to defend against it. I don't think you can blanket say it's going to be good or bad. Human nature would say it's probably not going to be good. But lots of times, again, at the end of the day, what matters is price. So it's not a good thing, but I don't think it's automatically something that's got to be like, well, you can't blame it all on that. Supply and demand wins in the end, and I think that's more important than what's going on with tariffs.
All right, let's talk about outlooks in corn. We talked about flirting with this number, but Mark in Iowa wants to know, is $5 corn possible come October?
New crop corn?
Yeah, we'll go new crop since we're already...
We got to get through 475, but yeah, it's absolutely possible. A lot of people are hoping that we get back to where we were, last summer, that 508 level. That's probably a good target to keep. But if we have any sort of a weather issue, not so much from South America, but the one good thing is too, and I can't emphasize this enough, we've had really good exports, surprisingly good exports of our row crop.
And where are the destinations for that?
A lot of stuff has been going to, I think it's almost like pre-gaming the possibility of tariffs, but our typical partners, a lot of it's been going to Mexico, and we've not seen China come in at all. Obviously, they're not a big corn buyer, but you never know how these things will turn out. So, but yeah, you've seen really good continued demand kind of across the board. Our usual trading partners there.
You mentioned drought a tiny little bit, but let's talk about the weather picture. Brian asked us online, when will the Midwest drought affect grain prices?
Well, I don't think it's going to matter until we've got to get through at least, pollination or something like that. First, we got to get through planting delays, right? We'll see. Is it going to be too wet, too dry? I know there's areas have issues with subsoil moistures, but I don't think that's really gotten a hold of the market yet. I will tell you this, it wouldn't hurt, and the good thing is if you're talking about new crop corn, which is what we're looking at, what you have to defend against is 428. You don't have to worry about if we go to 528. So, 428, we've gone from 428 to 475. I think if we get one more push up, and everybody now apparently knows that 430 is the number everybody needs, so we're probably going to hang around 430 for a while. If we do get the drought, it always comes in during pollination, and then also that July 4th weekend. Are we going to go home on for the weekend and come back, and we're going to have a limit up day? That's all in the hands of Mother Nature.
All right, we're going to go out of order here, Julie. I apologize. We're going to go, this guy, let me see if I get this right. Chris in Illinois wants to know, is this the best that Mr. Market can do without a weather market in SA, as in South America?
Is it the best we can do? I don't know.
It's your question,
Yeah.
Chris in Illinois. What were you trying to accomplish with this today?
Well, I think the number one thing is if you've got old crop corn and you've been holding on to it, you should really double check and say, what's your risk here? Because we've rallied 96 cents. Lots of times things can change and all of a sudden we lose half of it. So don't give away 50 cents without a fight. New crop corn, and I've been talking with my producers as well. We've used this rally to get to about 10% sold. So don't be afraid to make some new crop sales there. Don't go bananas, but a 10 or 15% into a 40-cent rally, 50-cent rally. I know it's not a dollar rally, but I don't think that you can't be too careful right now. So reward the rally with corn at 475. There are some strategies out there now. You can protect 460 or 450. I think that's key. And if 430 is your break even, there's that old expression, nobody needs practice farming, right? You want to make sure that you are making money. And this could be another one of those years we're in a knife fight. So it's a good start. It serves a lot better than we thought we were going to be back in December. If I told you we're going to be $1 higher in corn back at Thanksgiving when I met with you, I think you'd have,
I think you'd have been probably laughed off the table.
Exactly, yeah. So it's been a gift. Like they say, take advantage of it. And hedging is not calling the top. What you want to do is protect as much of that revenue that you possibly can. I'm not going to sit here and say we can't go higher. Boy, I hope we do, because it's a lot more fun to trade 550 corn than it is to trade 450 corn.
Because only one person gets the top?
Yeah.
And you just always hope you're close to it.
Right.
All right. Lastly, quickly, the dollar weakened here a couple weeks in a row. Is that factoring in yet into commodities?
I don't think so. I think it's kind of a backstory. People kind of use it as a fallback. We've already had a pretty big, the dollar went up 10% already. So we hit some big key technical levels. I think it was a couple year high. So we've already had that kind of baked in. To see it pull back a little bit, I think that's going to depend on what happens with inflation. That's probably the number one driver right now. We got that hot inflation number. What does that mean? Well, it means that if inflation's at 3%, the Fed certainly is not going to be cutting rates anytime soon. They may say they want to, but that's going to affect kind of the overall picture of money flow. I will say this. There are people out there that are still concerned that inflation is going to be a problem. Inflation is usually good for commodity prices. So, if we go back to where we were, we have like stagflation in the 70s. Those are actually some pretty good years for producers because the investment community will flock to commodities because they want to hedge against possibly higher inflation. So watch that carefully.
All right. We'll watch what you say carefully as well. Chris, good to see you.
Good to see you.
All right, Chris Robinson, thank you very much. A reminder to get signed up for the Market to Market Insider newsletter. It is free. You can sign up today at markettomarket.org. Next week, clothing manufacturers who survived when others unraveled. And we'll have Dan Huber. He'll be here to talk about the commodity markets. Thanks for joining us, and have a great week.